Hello and welcome to another episode of NSE Finwiz powered by CNBC TV 18 Season 3. Today we are at the Mumbai office of India's leading manufacturer of cement and concrete, ACC. Established in 1936, ACC is India's leading manufacturer of cement and concrete. With a countrywide distribution network, the name ACC enjoys high brand equity. NSE Finwiz visited the office of ACC in Mumbai with the country's finest experts to advise and educate the young employees on investments and financial planning. Well, we're now joined by our two very special experts. We have Harshr Roongta, who's a personal finance advisor with harshrroongta.com. Welcome to the show, Harsh. And we have Gaurav Mashruwala, who's also a personal finance advisor. Welcome to the show, Gaurav. And our core topic for today is mutual funds. So, Gaurav, mutual funds, we hear a lot about it, we read about it, but what is a mutual fund? There's a lot of confusion about what those two words mean. Could you shed some light on that?
Sure. So, suppose if you want, we are right now at Thane, and if you want to go to Pune, there are different ways we can go. One is we can go in our own car, which means we decide the point to start, we decide the point to stop. Wherever we want to take a break in between, we can just stop the car, the steering wheel, accelerator, clutch, everything is in our control. That's like making investments directly. Everything you're doing it on your own. Another option is either take a bus or take a train, which means those would have a predefined route, predefined starting point, predefined ending point. You go to a railway station or bus station, and then it'll drop you at Pune, and that's where you get down. That's what mutual fund is. Mutual funds are a way to invest either in stock market or into government securities, bonds, which is called debt market, or in gold. The schemes would be defined. There'll be a lot of people investing in it, and because there's huge amount of people investing it, one, the expenses are less. Second is they have a large corpus, and there's somebody expert who's managing. So mutual fund is basically an investment vehicle which lets you invest currently in either equity or in gold or in debt, as in corporate bond, government securities, or combination of this.
Okay, so Harsh, so basically we can use the mutual fund as a vehicle to invest in whatever asset classes that we want. So what's the first step? How do you decide which mutual fund I want to invest in? Because there are a plethora, there's a huge number of mutual funds out there with very fancy names. How do you decide and pick the right one for yourself?
So I think let me just add on to what Gaurav said. I mean, the various asset classes that you have are the various destinations, right? You need to decide where you want to go, right? Which is what we were discussing, that you need to know where you want to go. You need to decide that first, and I think that is far more important than which exact whether you will take X railway or whether you will take a bus. I think the real important part is deciding where you want to go, and I think frequently people confuse themselves by saying XYZ scheme versus ABC scheme. You know, that is like saying that what is more important than reaching Pune is whether I should take a super fast train or whether I should take a passenger train or whether I should go by bus. What is your ultimate objective? Your ultimate objective is to go to Pune, right? And you have certain resources. Then you will decide which vehicle to take. So I think the real key to deciding on the mutual fund scheme is to first decide where you want to go. I think that is very, very critical.
A lot of this question is from Amit Kulai. He says, how do you assess the different ELSS funds before investing?
So first is again ELSS. I'll expand and even simplify that for people who find it's in jargon. ELSS stands for Equity Link Saving Schemes. So that's ELSS. Now it's basically the scheme which has got some approval from income tax CBDT, which means these schemes are eligible for tax benefit. Section 80C, when we put in PPF, a life insurance premium, we get tax benefit. One such scheme, one such option is investing in these ELSS which are launched by mutual funds. So that's number one. The second part is how do you assess? Well, it's basically looking at the performance. In case of ELSS, had been few other things, Had it been a normal equity fund or a normal index fund, I would have told you much more parameters. Here your sole aim is to get tax benefit and get better returns. I'm not saying the highest. So you may want to compare those and see the scheme which has not only better returns but lesser risk. More the volatility, more the risky, less the volatility, less risky. So you want to pick up not just the returns but also pick up the risk and then pick up the fund that you want. Apart from that, few other things that you may want to check is how many years that fund has been in existence. If the fund has been in existence for long, it is better for you because that means it has withstood more business cycles. Also, you want to check how much total money they manage. More the corpus they manage, the expense ratio, the amount of expenses that gets charged will be lesser. So your expense ratio, funds existence, all these things also needs to be looked into before picking up a ELSS. But it's not one single measure based on which you'll pick up an ELSS. You look at several of those and then pick it up.
On that note, it's time for a very short break. Don't go anywhere. We'll be right back.